Hello and welcome. In today's episode, I'm going to talk about how to catch good entries for US30, also known as Dow Jones. So US30 is an index of 30 largest companies listed on the New York Stock Exchange. So US30 is an highly volatile asset class which bears a high risk but also comes with promising profits as well. Therefore, it is suitable for intraday traders who are looking to scalp or to open and close trades within a day. So in this strategy, you only need one indicator. If you're using TradingView, go to Indicators, Sessions. So I use Sessions on chart. So you activate the high and low. There you go. And since these are companies based in the US, ensure your time zone is switched to New York, UTC -4. We have 3 sessions here based on our indicator. So we have the London session, New York session, and the Tokyo. Tokyo is used to represent the Asian session. If you combine Sydney and Tokyo, it forms the Asian session. But whichever way, you can use Tokyo to represent Asian. So this is the Asian session with highlighted with yellow. Then we have the London session, followed by London session, and the last session of the day is New York. So again, since the companies are based in the US, the New York session, there is high volume during the New York session. As you will observe from the examples, the New York session is highly volatile because that's the time most of the activities are taking place in the US. So as you can see, there is high volume during the New York session. Is another example, was high movement. So occasionally there is volume also in the London session, but mostly in the New York session, and there is little volume during the Asian session. As you can always observe, this is very little volatility. There is little activity taking place in the US or in the market. So there is high volume during the New York session, and it is recommended that you trade during the New York session for US30. So for the purpose of this strategy, you need to mark the daily high and daily low, and then you wait for the liquidity grab. So for liquidity, I have done a video on liquidity, but to give a recap, so for example, if the market is ranging, so liquidity grab is the manipulation. So most retail traders place their stop losses here, and so they are stopped out, then the market moves down. And in most cases, these are huge institutions or commercial banks that are manipulating most of the retail traders, and then they take a move. So you don't want to be trapped in this zone. You want to wait until they manipulate this zone. Once they have stopped out most of them, you join them and make a sell so that you can, because the last thing you want to do is to go against the big banks. So you move with them. So that is it for liquidity. So for the daily high and the daily low, you need to mark the midnight, New York midnight open, and also 9:30. So there is 9:30 open. So since we want to trade the New York session, so far you draw a line for the daily high between this midnight and 9:30 open. So this is the daily high and the daily low from midnight to 9:30. So again, make sure this 9:30 and the midnight is based on the New York time zone. If you're in Kenya, this is mostly 3:30 p.m. So now we're waiting for liquidity. We are waiting for any of the these daily high and or daily low. Daily high, daily low. We're waiting for liquidity to be taken in whichever side. If the daily low liquidity is taken from the daily low, then we take a buy. And if liquidity is taken from the daily high after 9:30, you do this. Sorry, you do this after 9:30 open. So if the daily high liquidity for the daily high is taken out, we take a sell, and then if it is daily low, we take a buy. So, and before we continue, any zone, like for yesterday, you can also mark the yesterday's high and yesterday's low. For example, yesterday's high was this zone here. I'm using from the Asian session to this New York session for yesterday. Yesterday's low, recorded low, the maximum recorded low was this zone. So these are zones of liquidity as well. We can mark them as liquidity zones. So there lies liquidity, because the people who took a buy here and their stop losses are lying in this zone. Others took a sell, their stop losses are lying in this zone. So we're watching to see. Now we have liquidity here and also here. So we're watching to see which liquidity is going to be taken. Now let's move to 15-minute time frame. We are not yet at the 9:30, so we are not taking any trades so far. We are observing. Look at the 9:30 open. So this is a 9:30 candle up. Now let's remove this line and see if there was any liquidity taken. So as you can see, there was a long wick candle that manipulated this zone, and by extension yesterday's maximum low was also manipulated. So this is a perfect example of liquidity grab. So this candle has manipulated, has stopped out most of the traders, and we're now looking for buys. So you can go back to your 30-minute time frame. So in this case, you can take a buy in this zone, stop loss just below the last, and then your first target is the daily high. The second target will be yesterday's high. That was perfect. Let's look at another example. So we mark the midnight candle and the 9:30 open. 7, 8, 9:30. So this is our daily high, this is our daily low. Now we want to see which of these daily high or daily low will be liquidated after 9:30 open. We are waiting for liquidity grab after 9:30. Liquidity has been taken. So our daily high, liquidity has been taken. So you can take a sell. So you take a risk reward of at least 2.5. That's 2.5.